With upwards of 60% of Canadian mortgages up for renewal in 2026, what is the best strategy moving forward? We know that there is a lot of angst amongst homeowners, especially with these renewals, because for the most part, the average renewer is going to see around a 15 to 20% increase in their payments. And a subsection, depending on your price point, will see increases of about 35%. So this is some really big numbers and some really big decisions. Both myself and Mike have done renewals very recently. So we're going to get into what we did, what our strategy is, and just to give you some help if you are coming down with those renewals. Do you do a variable? Do you do a fixed? What is the runway for renewals and these rates coming up here first? So we're going to put it over to Mike first because he recently just renewed his. And for myself, I renewed 3 of my mortgages back in November. We're going to bust some myths about this whole process and then share our personal strategies as well. So Mike, why don't you share a little bit about what you just did with your property and your renewal?
Yeah, so my mortgage actually comes up on its 5-year maturation in the end of June, beginning of July. We started, of course, being about 6 months out here, a little bit less, receiving notices from the bank and they basically give you a heads up. Hey, your mortgage is going to be up for renewal. This is what you can expect. And I've seen countless videos and articles, and we've talked about it on other platforms as well, of people being fearful of maybe the bank not renewing the mortgage with them. And before I tell you about my mortgage renewal, because mine was super simple, super smooth, and a lot easier than maybe you would imagine, I did have somebody call me the other day, and they don't have a mortgage with a bank. They actually went through a private lender for their mortgage. The private lender has forced them to sell their home. They actually missed one payment on their mortgage. They're coming up for renewal, and the private lender says, we're not renewing it anymore. So I think this is the subsection of people who are going to find themselves in a really strange spot. If you've missed a payment and you do have a private lended mortgage, you're already paying a wild rate. This lady was paying over 10%, but the private lenders are very savvy. They know what's going on in the market. And the last thing they want to do is have you missing multiple payments. And you know what happens when you miss multiple payments? You're likely just to stop making those payments because you are getting yourself in a place where you just can't catch up and everything just starts to put you underwater. If you're in that position, whole different ball game. For me, being self-employed, your options can be fairly limited depending on how you manage your income coming in, right? Because being a real estate agent, I have a corporation and my corporation pays me. So if you don't pay yourself a lot, having a corporation, you don't actually have enough salary to go to another bank and look at other options that are out there. So if you have a regular job, you have multiple options. You can now, with the new rules in Ontario, and I think it might be Canada-wide, you can actually go and look at different lenders and see what the other offerings are out there. So if you're currently with a TD bank, it's open for you. Go talk to RBC, go talk to CIBC, go talk to First National, see what else is out there for you. In my case, if I were to do that, I'd have to go through that whole application process again. And this is that barrier for you. If you want to go and get a better rate somewhere else, you got to go, you got to submit all your documentation again. Maybe your significant other has had a child with you. They've been on mat leave. Your income coming in is going to be different. What if you're not actually approved for a mortgage somewhere else? Right? So this is going to be that first decision that people are going to have to make. And that was the first one I had to make. That is the decision that means you got to do more work. Me and you are busy. We got other stuff going on. It's just a whole other thing we got to focus on to submit paperwork to a bank, go through another approval process. I decided to have a conversation with my lender, and I'm not sure how you ended up doing it, but my lender sent me an offer via email. They just basically send you a DocuSign. Is that how yours works? They send you a DocuSign and you just accept or deny?
Yeah, well, mine was a little bit different. I mean, I grinded with mine for like a year. I was trying to be previously, if I could get like a 3.99, I was going to do a renewal early with them within my allowance. I ended up doing a little bit better, but I also went down the path of using other banks, even though to your point, I wasn't in a capacity where I was going to change because I knew I wouldn't be able to get the financing that I needed just because of my structure is similar to yours. But in this market, because of the amount of mortgage delinquencies, to your point of the private lender, people can't make their payments, and mortgage originations are so low across Canada, we have a lot of power to negotiate. So I got rates from Van City. I was a credit union in my market, and then TD, and then used it to get my rate. And I got a really, really good rate. But I also keep in mind, I'm paying attention to the bond markets because I actually did something different. I switched from a variable over to a fixed on one of mine.
Interesting. Yeah. So I've been rocking, I've been rocking a variable rate for the last 5 years. So if anybody's been through that, I don't even know what we want to call it, shit show. It's been fun to say the least. I've seen my payments go up like $1,500. Was the increase from like the lowest to the highest per month. So to see just another $1,500 that was unexpected start to come out of your bank account was just like, you just shake your head. And of course, it puts a sour experience in your whole home ownership, right? It's like, do you want to risk going variable again? And that was the conversation I really had to have with myself is, do I want to have that potentially happen again? And well, yeah, I'm going to go variable again and I'm going to just roll the dice and hopefully that's not what happens to me again. The offerings that came to me last month from my renewal were okay. I mean, I was offered like 409 on a fixed and then I was offered zero point 0.5 off the prime rate on a variable. Wasn't super exciting enough, so I just basically ignored the offers. But after not responding to them and them sending me another offer the other day, the offer came back a lot stronger. So they're obviously trying to keep people within their ecosystem. They came back at me with 399 fixed 5, and then they came back at me with 0.85 off of prime, which is solid. So I think we're going to end up going that route. Now, before you start to just accept an offer, I think just like Kyle has done, you got to do your due diligence, right? You really have to talk to the other options that you have out there just to, you know, get that conversation flowing and see if there's a better offer that your current bank can actually give you, right? So I've talked to other lenders and they've actually told me, take that 0.85 if you're going to go variable because they can't match that. They're giving me, I guess, some kind of benefit for being a current client. So
sorry, Mike, can you just tell the audience with the minus 0.85 what that rate actually is, just in case people don't know what the prime rate is right now?
yeah, that would bring me down to 3.30 as of I guess as of right now, but that would take effect in June. So my rate would stay the same today as it is because I actually am currently at prime minus 1.15. So this would be I've got a premium discount because my father was a mortgage broker. He was able to get me a better deal on my first mortgage there with the write down. I guess he can not get paid and then basically give me the discount. But for the most part, I think the best we would see out there is like prime minus 1. And I tried to negotiate better with my bank. They basically said, take the 8.5. Trust me, because I think they do have an inkling that rates are going to go up here in the short term with whatever's going on overseas and all the war and stuff that's starting. I think that fixed rate might come up a little bit. And then the Bank of Canada, who knows what they're going to do. I think they'd be crazy to start increasing the rates on the variable side. I think they've seen it not change things coming down too much, but I think it could be detrimental if it starts going up again because people are still struggling with the prices where the houses are today, right? And the house market is not moving very well.
Yeah, that's 3.3. That's amazing. I would run with that. That's one of the lowest rates. The lowest variable I heard last year, I had a client, they had a discount with a credit union and it was 3.27. With myself, that's your principal, right? So, with my situation, I had one mortgage coming up on one of my rentals that immediately needed to happen. I was negotiating with them for quite some time, so I ended up doing all three to try to get a better deal. So I ended up having on two of my investment properties, I got a variable at 3.69. My discount was around like 0.6 or something, whatever it may be. Was really happy with that. You get a little bit of a higher rate if you have an investment property because it's more risk to the creditor. But on my principal, I did not have a good discount. It was like 0.2. So it actually made sense for me to change over. And I ended up getting a 3.55 3-year fixed. and that's going to save me around $30,000 in that 3-year term. But for everybody watching, the thing with a variable, what's nice, you can always switch over to a fix at any time with no penalty, right? So if you're wanting to try to time where things are at, maybe the variable's low, things are going, depending on what happens with the economy, you can always switch over. If you're in a fix and you want to jump back over, then you're talking about all these fees, right? So it's important to understand, some of the runway. Also with that renewal on my principal, I was able to renew 22 months earlier because I went from that variable to your fixed. If you're coming up with a fixed rate, so there's logistics involved. Sometimes you can only be 6 months out. I'm gonna share my screen here just for a second, because we're talking about the fixed rates and what's been going on. And obviously we all know what's going on in Iran. And for those who have those renewals and just starting to have those conversations earlier, because don't wait till the end, because you may be able to get a good rate. Because I was able to essentially, I was tracking the job data, and I knew that the bond market was quite low and was going to pop up. And I got this 355 right before everything popped up. So this is the bond market right here. So you can see that this is just one day. There's a lot of volatility, and I'll explain why over the last little bit. But if we go out to a month out, this is at the end of February. So for those at home, Bank of Canada policy rate only affects variable rates. Bond markets affect fixed rates. So you'll see right at the end of February, these bonds have continued to go up. If these go up, that's likely the fixed rates are going to go up. A lot of this is because of the war in Iran and oil going up. If we go in a little bit more granular here in the last 5 days, you can see this huge drop down. This is because some of the job data that came in from Canada was really bad. So some of this, the chances of where things are going and what the Bank of Canada sees can change this a little bit. And now we're raising up here again, and we're having a little bit of an increase. So for those who are looking at their fixed rates, when you look at these bond markets and where they're going up, this is what I was checking at the time of myself getting my rates, to be able to time something where you could see if, and reading some commentators who know more than me, because neither of us are going to say we're financial experts here. We're not mortgage brokers. This is just our personal experience, but these are some of the things that we watch.
Yeah, and I think ultimately it really is going to come down to when your renewal is coming up, what are your plans over the next 3 to 5 years, right? Because if you are going to find yourself wanting to move in the next 3 years, it would probably be a horrible idea for you to do a fixed rate and then have the massive penalties that come along with actually terminating or discharging your mortgage versus going actually just into a variable potentially.
Can you, do they allow you to port mortgages in Ontario?
You can port a mortgage in Ontario, and sometimes you've got like that port and blend option as well. So you can kind of port and increase it a little bit if needed. But I think it just comes down to education for a lot of people. People don't really understand what's going on a lot of the time. You just get sent an offer from your bank, you take it or leave it, and then you don't do anything. And what happens is you end up on like a month-to-month mortgage, or you get like a 60-day mortgage paperwork that gets sent to you if you don't sign anything at a random rate that they'll stipulate. So it's just a matter of figuring out what makes sense for your specific situation when it comes to the mortgages. But you've got so many of them coming up for renewal in 2026 and 2027. I think we've got, it's like over 2 million as a total between 26 and 27 mortgages are coming up for renewal. What do you think is going to happen? Now, no one's going to hold you to it. This is just our opinion, Kyle. What does all this mean for our market here? Like, if you have this many people coming up for renewal, we are seeing, at least in Ontario, record power of sale, bank sales happening. I know you're seeing bank sales happening out there. This has been not a thing in my 10 years of doing real estate. You probably haven't seen a lot of bank sales out there in your time either. Do you think people are going to be able to renew and take on the extra hit from their 2% fixed or their 2.5% fixed to a 4 today? Do you think households can actually sustain that increase? And what does that mean for us in the market?
Well, Vancouver is interesting, right? I think anyone who's a recent buyer that bought from 2019 onward are the ones that are going to be in trouble, right? In Vancouver as a whole, I'm not sure if the viewers or even yourself know this, but around 50% of homeowners in Vancouver don't have a mortgage. So that's another reason, A, that, this market doesn't crumple because they don't have those forced, because of the pinnacles in the 20-year rate hikes, and they have a ton of equity. And that's what's also helping help our pricing, because these people who are so house rich, they're, taking lines of credit out or selling and downsizing, giving money to their kids, because over 90% of my buyers are getting help from mom and dad. So we are in a phase. So I think if you're, the boomer generation, a little bit older, I don't think it's going to be a big issue. It's going to really affect these people who highly leverage themselves. And with this, the recent job data that came out, and I don't know, with AI and how fast it's moving and people are losing their jobs, the Bank of Canada may be forced to keep those variable rates lower, not to have everything implode. But again, the Bank of Canada doesn't control fixed rates either, right? It's based on the bond market, and that's why you saw that spike up, because again, that job data came in, it was negative, the bond market went up, there's a lot of it to play here. But I think that's why 2026 is going to be a good year to buy. 27, I think, is going to still be a very similar year, but in 2026, you're going to have a lot more people under pressure to sell, where the rate renewals coming up in 27, it's likely a lot of people are probably going to get a better rate. So it's going to be more advantageous for them to maybe not even put their home on the market and just stay where they're at.
Yeah, I think that's a good point, right? And you're going to notice the people that bought 2020, 2019, 2021, any of those years where this is like their first renewal coming up or their first renewal has just passed, they're finding themselves with negative equity. They're finding themselves with bigger home payments. And I, that could be a fantasy, but in my head, I picture, that first time home buyer, they had a 1% rate, 1.5% rate. So they bought more house than they needed because they could, right? So instead of them buying that starter condo, they bought a townhouse. Instead of them buying the townhouse, they bought a semi-detached or something out here, right? I have the sneaking suspicion, and I could be completely wrong, very well might be, that a lot of those people who overstretched early on are going to have to find themselves selling to do a downsize, which sounds insane because they're likely 30 years old, 35 years old, downsizing. We usually expect downsizers to be elderly, they've got no mortgage, they're retiring, they want a bungalow or a one-story condo. Like, that's what I picture downsizers. But I've dealt with several young families in the last year and a half that have had to go backwards in terms of the house because they stretched too far when they bought their first property. So I don't know if that's going to happen in Vancouver. It may not happen in Ontario as well, but I have a sneaking suspicion that we might see a lot more of that happening. And the young downsizer is something that, like, our real estate markets haven't seen a young downsizer ever.
Yeah, that's interesting. I haven't seen any of that. I think probably the reason why, just because our average price point for homes in Vancouver is so much higher, that a lot of these younger people still haven't even been able to get into their detached home yet. They're still in, a townhouse duplex where it's still somewhat affordable in terms of price point, and they need, they need the space here. So I haven't seen anyone. I've had to work with a lot of sellers who are distressed and have to liquidate, but those ones are all in the income producing properties. We have a ton of speculative investors here in Vancouver who really over leverage themselves, and these rates are killing them. They're taking losses, and those are the people that are, I haven't seen the downsize example that you've been having those conversations with, but I'm more so seeing it on the side. But in this market, I've also working with a lot of upsizers, because upsizers, there's a lot of great opportunity, who are looking, to take the loss on the property and then, get some value up there. But they have been inspired because the rates are lower, or, they've been able to get some lower rates, because there are some clients, they were in around a 5% per tile or 5% area, and the renewal rates are coming up, and some are seeing some impacts depending. I think this is mostly based on 5-year fix, which is the most popular at the time. Now a lot of people are doing a little bit lower, like 3 years and things of that nature. So it's really dependent on that the state of affairs in your home. But definitely shop around, get some advice. Don't take the first offer your bank gives you, because you can negotiate big time with your brokers and your banks.
Yeah, they want you, as you got to remember, you are their client, right? They want to keep you. So sometimes there's a little bit more they can do to keep you. Obviously, they want more money at the end of the day. That's important for them too, right? So their offers might not be, their bare minimum, but yeah, have that conversation, get your offers. Don't wait till the end. because that might not be your best offer. You might have seen a better offer kind of pass you by, especially with the stuff that's going on around the world. Stuff changes, offers change, businesses change, finances change, economy changes. And I think if we look back at this conversation in a couple of years, it's going to be interesting to see how it actually lines up with what happened. And maybe this is all for naught, right? Maybe this whole mortgage renewal thing, people are just going to keep on trekking, right? Maybe people just keep moving through it and it's not a big deal for people, or at least outwardly not a big deal, because as Canadians, we like to, or maybe just in general, people are very tight to the sleeve with the money conversation. So even if they're hurting, they're probably not going to talk to you about it in person, right? They're going to keep it in house, unfortunately. So I think this has been a good one. It's a great conversation to have. Make sure that you get the advice from people who are actually giving you your mortgage. Talk to your mortgage broker, talk to your mortgage professionals. This is just our opinion on what we've experienced. We've had great and easy experiences actually getting mortgages renewed. We're not losing our houses. The bank's not denying mortgages for us, but there are some people who are experiencing that on the private lended side of things. So we'll see you guys in the next pod. If you are watching us on YouTube, don't forget to subscribe to the channel. If you're listening on Spotify, make sure that you click that follow button there, and then you will be alerted when we drop our next episode. Thanks for listening. Thanks for watching. We'll see you in the next one.
See you in the next one.